All right, Happy New Year, everyone. Sorry for the lateness in the drop of this Outlook. Was indulged in the New Year's festivities. So, a couple housekeeping tips. Like I said, fully transitioned now actually to futures. So, for the perceivable future, this is what I will be analyzing on the charts, will just be the futures pairs. Primarily, I'm going to do commodities and indices. So, I have gold, might add platinum, silver, copper, some of those in there throughout the year. But primarily, I'll really be focused on the indices. I really like trading the indices. That's what actually brought me to futures in the first place. I learned about, or I started trading the indices on CFDs or contract for difference, and then just having the deregulatory environment and trying to deal with that for the brokers and having to analyze charts on TradingView, execute them on another platform, then dealing with like alerts and stuff. It just wasn't a very well sound system for me. Trying to track different things, track prices, so on and so forth. And then I learned about futures trading and having everything on one platform, like doing my executions, doing my alerts, doing my markups. It just was good. Having the contract sizes set for me is just awesome because now I don't have to try to figure out what my lot sizes are going to be. It's just, all right, this is the contract size. If I want to add on more size, just add more contracts and so on and so forth. Everything's regulated. So I just like the futures environment. It seems more professional, more better, I guess to say. And so that's what drove me to looking at the futures in a nutshell. And now I'm looking at GC1, which is gold futures right now, Dow Jones, NASDAQ, S&P 500. I'm not really going to be trading the S&P 500 much. I really like trading the NASDAQ and the Dow Jones. I'm at that point where I like the volatility, a lot more opportunities. And as I scale and grow my account, I will be executing and holding trades long term. But right now, I'm probably going to be sticking to day trading on the micro futures until I get to the point where I can hold those contracts again. And then I have the Forex Futures 6B1 here, which is the British Pound Futures, only because a couple of the people that I'm actually teaching right now, they're trading the Forex Futures. And so I'm going to finish this until the move that we've analyzed comes to fruition. And then once it's done, that's when I'll really take it off my plate here. But for right now, these are the pairs that I'm going to look at. So like I said, I'm going to be analyzing futures charts. The executions that I'll be doing for probably like just this month will be on the micro futures charts. And then going into February, I'm going to be doing executions and analysis all on the futures. So I'll get rid of that to micro. All right, so starting with gold, we will go up to the daily. We explained that we were looking at a potential continuation of the current market trend or the market bias, which was a bullish trend. And that was before we saw this as a potential break of structure or a liquidity draw. I think I had it as a question mark in the previous outlook, or I had it marked as a liquidity draw based off of what was happening on the 4 hour. And so what I ended up doing here, what we're ended up looking at is once we saw this low was, mitigated, how to analyze what I would use this or what action this is going to be based on the 4 hour time frame. So we went from the forest and now we're looking at the trees. And so seeing this as a break of structure rather than a liquidity draw is based on the fact that once this initial run happened, yes, it looked like a draw on liquidity, but once this inefficient pricing was generated here and it failed to give a continuation to go higher after being mitigated, that's what led me to see this as a break of structure. And so personally, right now my conviction is to call this a transition of state on the macro perspective. And so what I'm seeing right now is gold being in a bullish range. And so we're in a bullish range from this previous structural point. And this is the structural point external because it's the last one before taking out the high here. And so every point inside of this are like my internal structural points. Every high or low is an internal structural point. Excuse me. And so on the daily, this is my last internal structural point on the macro perspective. So seeing this broken not only does it, initiate the change of state, but it also initiates the pullback inside of this price leg here, this overall price leg. Or really shouldn't call it a price leg, because really the price leg would be from low, high, pullback. That's a price leg in itself. But I should say the change of state here from this external low to this liquidity point. And so the breaking of this low here, the break of structure here, to me is what solidifies this range. And so now I should be looking, or what we would be looking for, is opportunities to trade, in the premium side down into the discount side, and looking for balance of any inefficient pricing on both sides of the market, and then looking to play, the ultimate continuation of this overall trend. So our bias right now is still going to be seeking continuation of the bullish trend, even though we're in a bullish range. But that's just what it is, as of right now. So yeah, on the daily, this is what we're looking at. The 4 hour, I was marking up. I saw a point of interest. I saw liquidity here. Looking at the discount, if I'm looking for continuation, I see a price gap here that I have annotated, that I want to see price pull back to. On the premium side, I'm not too driven to look for opportunities for sells at the moment. I'd rather prioritize looking for the lows. If it does pull back up any higher into this area, possibly into this price gap here, because everything here looks pretty balanced to me, it would really be a draw on liquidity to fill 50% of this price gap, and then I would look for price to go lower. If it continues higher, well, then it just continues higher, and then I look for other opportunities. But I really see this potentially ranging here, as of right now. So that's what I'm seeing on gold futures, or GC1. All right, moving on to the Dow Jones. Ooh, so so I saw this before as a draw on liquidity. And I don't even think that was really just like a valid play. I think what really should be happening right now is seeing this as, just continuation of a run where we have low, high, low, high, low, high, low, and then we're driving higher. I really, and this is what I'm going to do. I'm actually going to go clean slate on this, because yeah, it's just not. It was just bad. So right now, the current market state is a bullish run, as you can see. And so from the forest view, this is what we're seeing. The last, low that I see is here. This ran to this high here, and then in between we have highs and lows running to that high, and then the last higher low is here. Then we have unwillingness shown. So this unwillingness could be leading to a potential break of structure, but I don't want to anticipate. I just want to note that we have unwillingness to take out this high. So there is potential for price to have an action at the previous higher low. Why do I say at the previous higher low? Because this is a liquidity point. Every single, or really it's a structural point, but also a liquidity point. And so every time we create a liquidity point, these are, areas in which we would like to see potential actions occur. So it, depending on what the action happens here, or if there's something inside of here on the 4 hour, then we'll see price continue higher. If not, this could be the potential for price to break this low and then, move lower. And so on the 4 hour time frame, the reason why I'm skeptical of, not only this unwillingness, but price going towards this low, is the inefficient pricing existing inside of this overall run right here on the current price leg. And so we do have that unwillingness, and we do have, this area over here in which this here mitigated this area of interest, but it's not really, it's not really showing me anything. The only thing that I would really see is if we mitigated this area of interest, the action that could occur is we could see price, draw lower to take out this low. And if there is any sort of mitigation, if this isn't mitigated already, if this isn't mitigated already, I could see price pulling back to mitigate. I could see price pulling back to mitigate this inefficient pricing or this price gap here. And that would be a part of the mitigation of this liquidity point, which would be, it's an anticipated liquidity draw to mitigate this inefficient pricing. And why I say that is based on this area of interest here being mitigated, and that generating some sort of, because of this action and mitigation, this generated inefficient pricing following it. We see that it mitigated this inefficient pricing here, but it failed to mitigate that, and then we see it failed to mitigate it twice. So I would be looking for price to pull back into this price gap 50% and a little bit, and maybe 100%, and then continue higher. As of right now, all of this to me is pretty much mitigated. There's no inefficient pricing existing in this price leg, so I can with conviction say that price is most likely going to draw lower to pull out, or to, pick up some more liquidity before continuing higher if it chooses to do so. Now, if price decides to just continue higher, then it continues higher, then we look for opportunities that way. But as of right now, I can see price pulling back to take out this liquidity point, mitigating this inefficient pricing, and then continuing higher. That's the narrative that I'm sticking with, and yeah, that's what I'm confident in based off the analysis right now. All right, going over to the NASDAQ. So the NASDAQ has been very interesting. It's similar to the Dow Jones. We are in a bullish trend still. The only issue, or not really issue, is we have this draw in liquidity right there. That is a clear draw in liquidity. And that led to the creation of this run here, which led to unwillingness. But that unwillingness was faulted by the mitigation of whatever inefficient pricing happened or area of interest was on the 4 hour here, which led to another run, but it led to unwillingness again. And now we are leading into mitigation of whatever is happening here on the 4 hour, which we'll look at in a second. And we could be potentially seeing something happen here. But let's dive into the 4 hour to look for a little bit more price action to see what we got going on here. All right, so on the 4 hour, like I said, we had this area of interest, which we mitigated 50%, which led to this run. And that was what thwarted this unwillingness here. And then running higher, we now have pullback into mitigation of this inefficient pricing here. But it's unlikely that this will sustain, only because if I'm looking from, mitigation of this low up to this high here, if this unwillingness is going to hold, I can see this, drawing lower. But ultimately, I see inefficient pricing a little bit lower than here, which is a part of this action and mitigation. So I can see, potentially fill of this price action, or fill of this inefficient pricing here, and then drawing lower to fill in some sort of inefficient pricing, which would be a price gap between this candle, and this candle here. So that's what I'm seeing as of right now. I'm gonna need a little bit more price action to be a little bit more definitive, but yeah, we'll see what happens there. And then on the S&P 500, like I said, I'm not really looking at this too much. If the people that I'm looking to teach are interested in this, I'll say a little bit more. But currently right now, it's similar to all the other indices. We're in a bullish run, pullback. This has some sort of draw on liquidity here. Just initially looking at it, we have a low, high, low, push up, and now we're pulling back some, but it's not really much to say on that. All right, and then on 6B1, we are still looking for, similarly, the continuation higher to fill any inefficient pricing that exists inside of this bullish price, or this bearish price leg. We had solidification of the price leg once we mitigated that liquidity point here. That solidified the pullback. So now we were looking for price to pull back into this inefficient pricing here, but that's on the daily, so I'm not really going to mark it up. But ultimately, what we're looking for is potential plays off of the inefficient pricing that existed, which is the origin of the move up here, to continue this bearish price action lower. Now, what's happening here is, following this break of structure, we have a pullback into this area of interest, which on the 4 hour looks like this. And so this makes sense now, because all of this consolidation, it failed to continue higher because it didn't have enough liquidity to draw higher. So where's the most logical place price is going to go? If it can't run higher, it's going to pull back into a pool of liquidity. And that pool of liquidity is generated here in the form of inefficient pricing, specifically a price gap. And this price gap, the reason why it's valid and you're seeing this run right now is because it's a part of an action of mitigation in which we had, a previous sponsor candle or previous area of interest here that was mitigated. And that led to generation of this price gap here, in which price decided on, I think it was the last couple days, drew lower and to fill 100% or basically 50% or fill in this price gap. And now we're seeing continuation, a real move, uninterrupted, very low friction price run to run higher. So I would not be surprised if price were to run this high alone today or in the Friday trading period or early into next week, and then we start looking for opportunities inside of the area of interest that we were looking at, which was this 4-hour price gap, but specifically this 4-hour area of interest here. So that's what we're looking at currently on 6B1, and then we would be looking for opportunities to catch continuation trades for price to go lower here. So as of right now, like I said, we're looking for the pullback to continue. This initial pullback into this liquidity is it makes sense. It's a pullback of liquidity. We failed to press higher, so we pull back into inefficient pricing to give us more fuel to take out this high and press on towards the ideal area of interest that we're looking for to continue the macro trend and continue the macro state. So if you've watched previous outlooks, we've said that we transitioned from a bullish run into a bullish range into a bearish run. We now have solidification of this bearish price leg, which is also the initial point of this bearish run, in which we have this break of structure, and now we're looking for balancing of this price leg, in which the origin of the move we identified is that 4-hour area of interest. And so I want to see price pull back into the 4-hour area of interest and then continue lower, with the ultimate goal of taking out this the low of the price leg and then this next level of liquidity, which is this liquidity point here. All right, so that's what I'm seeing on 6B1. That is the market outlook number 2 of week 1. Peace.